lenders in the market, outlining what mortgages they will buy from banks and other lenders. Lenders then sell those mortgages to Fannie, Freddie, and other secondary market actors in order to receive money to fund more mortgages. By selling the mortgages to Fannie, Freddie, and others, they create liquidity in the market, which allows lenders to offer the low down payment 30-year mortgage. These government-sponsored enterprises provide more than $7 trillion in funding for the U.S. mortgage markets and financial institutions. Together, Fannie and Freddie own or back over half of America's mortgages on both single-family and multifamily homes. While we might be a relatively obscure agency, we have a big job. I'm also excited to be at today's town hall because of its theme of Asian love. I'm sure it's no coincidence we're in May, Asian American, Native Hawaiian, and Pacific Islander Heritage Month. The federal theme for this year is Building Legacy Together, our community's journey of strength and resilience. Last week, I was chatting with a colleague of mine about how difficult the pandemic has really been for the Asian American community, how it's changed us and how we think of ourselves, as Asian Americans, but also how it's helped the next generation of Asian Americans strengthen community, increase solidarity, and identify ways to collectively heal. Advancing community through ensuring housing opportunities and fair treatment, a critical component of uplifting Asian Americans, Native Hawaiians, and Islanders. Asian Americans have historically faced significant barriers to homeownership in the United States. Many of you know, very first discriminatory laws in the United States were enacted to prevent Chinese and other Asian immigrants from jobs and becoming. By 1924, all Asian immigrants were denied citizenship. Early land laws were targeted to prevent Asian Americans from owning a home. The final alien land law was repealed by the Florida Constitution and only. Today, the Asian American community in the United States, 30 countries, speaks 100 languages, and has very distinct histories, cultures, and values. Asian Americans have migrated to the United States at different times under very diverse circumstances, impacting their experiences and their ability to create community. Homeownership discrimination against Asian Americans continues. A study by HUD found that Asian Americans and Pacific Islander homebuyers experience consistent adverse treatment 20% of the time. The level of discrimination is comparable to the level experienced by Black homeowners and significantly higher than the level of discrimination. So, what is FHFA doing in this space, and what do we know about lending in the AA and NPA? As part of the current mortgage application form, lenders are collecting more granular information on the applicant's heritage. Where before, we may have only known an applicant was other or Asian, we now know if they're Hmong, Laotian, Thai, or Cambodian. This kind of data, what we call disaggregated data, helps us to uncover trends and potential disparities that are often hidden in aggregated numbers. For example, when we look at aggregated data, we note that Asian borrowers and white borrowers receive mortgage acceptances at about the same rate. Pacific Islanders trail with the next highest accept rates. However, when we disaggregate this data, we notice that Vietnamese, Filipino, and other Asian groups have markedly worse accept rates. Importantly, these disparities aren't evident when we consider Asian Americans as a whole. They only become apparent when we look at these groups individually. Subgroup information provides additional context and complexity to the challenges certain Asian groups continue to face in accessing mortgage credit, and underscores the diversity of the Asian American, Native Hawaiian, and Pacific Islander. FHFA recently published this disaggregated data on the FHFA Insights blog, and we're committed to expanding our collection of disaggregated mortgage application data and sharing key insights with the public. It is critical that all applicants fill out this demographic data collection field. They'll have a large proportion of loans information is not provided. Demographic information helps the FHFA and other civil rights regulators ensure that all applicants are treated fairly and that the housing needs of and neighborhoods are being fulfilled. We've all heard the saying, if it's not measured, it doesn't exist. And much of the government's decisions are policy decisions are data-driven. I think this is a good thing. It can be complicated when we don't have quality, accurate data. Please encourage members in your community to fill out this important. Speaking of filling out mortgage forms, I would be remiss if I didn't mention FHFA's announcement earlier this week that the Supplemental Consumer Information Form will now be a mandatory part of the application process for loans sold to Fannie and to Freddie. This form collects information from borrowers about language preference, homebuyer education, and housing counseling, so lenders and servicers can better understand and respond to borrowers' needs throughout the loan cycle. Today, about 2/3 of Asian Americans were born in a different country. Myself. While we're seeing a growth in American-born Asians, there is still a pressing need for financial services to work for many borrowers who feel more comfortable speaking a language other than English. Buying a home is complicated and is for most people the largest investment. It is critical that everyone fully understands how their mortgage works and what their rights and options are. When it comes to this significant of a financial decision, you have to know the nitty-gritty details, have a vague sense of what's going on. This goes hand in hand with receiving education through a housing counselor or homeownership education. Many housing counseling services offer language assistance and resources in a variety of languages. Because we know that just having the terms written down in your preferred language doesn't mean you understand. We also know that family translators may not have a strong grasp of financial terms. Again, so I'm happy to be a broken record and saying, please, identify your preferred language. That information really helps the federal regulators determine whether all communities are being. This form, together with other key resources, is available on the Mortgage Translations website. The site contains documents and resources available in English, Spanish, traditional Chinese, Vietnamese, Korean, and Tagalog, including, for example, the loan application, mortgage assistance application, and a mortgage guide that walks an applicant through every stage of the home buying process. We're proud of our record on advancing equity for the AA and NPHI community, for other communities of color in the housing market at FHFA. But we know our work is never done. We're working tirelessly to find opportunities to advance sustainable, equitable, and affordable housing, and then make those opportunities a reality. Whether you're a renter or a homeowner, we believe Americans deserve a financial system that is fair, affordable, and provides equitable access for everyone. Thank you so much for the opportunity to speak to you, and I look forward to talking more.
Why don't you stay up here and have a seat? I love everything that Leda talked about, and it's so important. You know, the one thing that, of course, the last 2 years has shown us is really what any minority knows is the inequities in this country. But it has been put to the forefront, not just with Black Americans, but especially with Asian Americans in terms of the AAPI hate. And what Leda is showing is really the reality of we are all one. What my experience as a Black woman is, there may be some nuanced differences, but at the end of the day, it's very similar to what a Filipino American is dealing with, or Korean American is dealing with, and so many other groups. So we cannot any longer remain in silo and think that these are just my problems. My problem is your problem. All of us have a problem in terms of how do we deal with housing and all the issues that are coming up right now, and so many of the things that Leda talked about. So that's part of what we're going to talk about today. Let's bring up the rest of our panel, Michael Innis-Thompson with TD Bank and Tamara Gifford with Ocwen PHH. All right, so let's get started. This has been, first of all, I'm just so excited. But we're going to start with the first question. Everybody in this room, and especially you guys on the panel, know what our issues are. From supply side, I'm just talking about housing issues. From supplies, from, of course, closing the racial wealth gap, which we're focusing on, from, prices going up so much that you have to come to the table with $100,000 in extra cash, and most of our communities don't have the ability to do that, just so many different things that are coming up right now. Everybody in this room knows all the issues. Let's focus on the solutions. So we can, Tamara, let's start with you. Tell me, what solutions are Ocwen/PHH coming up with to handle the myriad of housing issues going on right now?
Yeah. So Ocwen is really focused on reaching our borrowers. So for those of you who don't know, Ocwen is a mortgage service. And so we handle mortgages for investors. And so our job is really helping homeowners who are struggling with their payments and stuff. And so we are focused on borrower outreach, trying to reach out and educate homeowners on what their choices are, what their solutions are, and making sure that they're educated as they move forward.
Excellent, thank you. Michael?
So what we're doing at TD is really looking at the full spectrum of our product set. So over the last several years, we've looked at our portfolio product, and Faith knows from my time in a previous institution in California, my work in this space, and we're looking at affordable products to see, well, where are the thresholds? And so we've made adjustments around debt-to-income ratios, made them a little higher than they have been before. We've lowered our credit scores to 620. So we're trying to mirror somewhat of the an FHA program for affordable home buyers. And we've also looked at our home equity products. The minimum at the time was $25,000 as an entry, lowered that to $10,000, realizing that individuals don't necessarily need $25,000. So we want our products to be more inclusive. But I think most important, and doesn't directly address the issues faced by the AAPI community in this forum, but in March we rolled out a special purpose credit program, which is designed and focused on increasing homeownership rates in both the Black and Hispanic communities. And that's a special provision under the COA that allows lenders to make special considerations and focus the efforts on any particular race or ethnicity. And so that's been a big improvement for us in terms of, I don't know how many lenders today are doing special purpose credit programs. We're probably one of the few lenders that are doing it, but we stepped out in this space because we thought it was very important to show some leadership along with other lenders that are doing this to encourage more lenders to really participate in special purpose credit programs, because they're important in terms of, advancing homeownership rates for the various ethnic groups that we serve.
Is everyone familiar with special purpose credit programs and what they are and what they mean? Okay. Well, just a real quick summary. In essence, it is a way that banks, lenders, and servicers can target certain communities instead of making things products that serve anybody within a certain income class. They can target it and say, we want to focus specifically on the Asian community. We want to focus specifically on the Black community, focus specifically on the Hispanic community. And that's very important towards, again, closing the racial wealth gap, because one thing, even though I go back to my original statement, we are all one, there are nuances that change how it's best for us to get into a home based on our circumstances. So one thing I've learned as an example, for the Korean population, they're heavily entrepreneurs. So they may not have the same needs. The way they get into a home is going to be different from a community of mostly W-2 employees. So those are things, that's what the Special Purpose Credit Program does and how it supports. So it's a great model. Thank you, Michael. Leda, granted you're not dealing with our individual consumers, but from the FHFA side, what are you guys doing? What solutions are you implementing?
So I just want to build a little bit off of what
I did.
build a little bit off for about 40 years. Heard the federal community financial different kinds of income, right? So last year, Fannie Mae began the inclusion of putting rental payments into their underwriting system. So we know a rental payment is a consumer's biggest expense, and it's really indicative of whether they will pay their mortgage. So and that's never been included before. So we're looking at that. FHFA is looking at updating the credit scoring system. So right now, they're still using classic FICO. Many of us don't know what our classic FICO scores are. So when you get a credit card statement, they're like, here's what your score is. That's not your classic FICO score. And I know a lot of consumers have been really confused then when they go in because they think they're tracking their credit score, they think they know what it is. And then when they pull the classic FICO, which is very difficult to get as a consumer otherwise, surprise. And also just looking for credit building opportunities for renters, too. We don't want to forget the renters. And so Freddie Mac recently partnered with Isuzu to make sure that their multifamily owners participating in the program provide those on-time rental payments to the credit agency. And that has, since launching in November of last year, 34,000 multifamily units have enrolled. 73.5% of enrollees have seen their scores increase, and 13,000 credit scores have been established where they didn't have one before.
That's incredibly important because the reality is, and I see this especially with newcomer Americans, they're not familiar with how our credit system works. And so if you're coming into this country and you are used to the ways of your home country, it's easy to get locked out of the process because there's no awareness, and spending patterns are not the same the world over. And, you know, Americans are heavily reliant on credit in a manner which other countries are cash-based across the board. So it's incredibly important, the work that you're doing. Sticking with you, Leda, for a moment, and this is a bit of what you just talked about with DCC. How are you partnering with other stakeholders to, again, achieve, let's say, to increase our homeownership rate?
We're definitely continuing to strengthen our partnerships with other federal regulators who've been meeting regularly with FEMA and CFPB, what we can do to address homeowners and renters who are impacted by climate change, right? That's, I think, one of the most important issues of our generation, and making sure that people are protected and they know their options, they know information going into the home buying. We also signed a historic memorandum of understanding with HUD last year to increase our data sharing and information sharing and just capacity and lending and fair housing practices. But I also want to take this note to let everyone know, I think sometimes when you write comment letters and you're like, who's reading them? Like, you know, is anyone doing anything with them? We are committed to hearing the diverse. And, you know, just for example, for the Equitable Housing Finance Plan request, I read every single comment. They're highlighted. I was reading them yesterday when I was thinking about policy items. So if you're wondering whether federal staff read your comments and take them seriously, we do, and it really influences.
That's really good to know. I have commented them. I do wonder. So very good. Michael, you. How is being a partner with other stakeholders?
So a big stakeholder for us is the Asian Real Estate Association of America. We support them and sponsor them. And we do that because we believe in the mission by sustainable. And we also learn and get data from our area that helps us determine how we go to market. So, for example, not just ARIA, but from Realtor.com, the recent information indicated that most of the lift, our growth in homeownership in 2021 came from women and millennials in the AAPI community. That is very important piece of information because it informs how you should market. So, for example, to be inclusive and attract, let's say, women and millennials. So data is also very important in what we do. And we continue to partner with individuals like NAAC to understand how we can collectively solve the problems that are faced by the community.
That's perfect, and especially because what people are starting to blend together are the differences between millennials and Gen Zers. And Gen Zers are actually very interested in buying homes at a faster clip than millennials were at their age. But what we're finding is the difference between Gen Z and millennial, and how much more innovative and entrepreneurial they are, and that comes in. So it's great that you are and I'm using them as an example, but it's great that you're partnering with organizations like ARIA who can help expose you, because how would you know if you don't have that level of exposure? So that's excellent. And Tamara, you all, Ocwen PHH has always been a strong partner with nonprofits. Tell us, in addition to that, or with that, tell us about your partnership.
Yeah, so the way that we're partnering with external stakeholders is, like you said, generally through our nonprofit partnership, which as well as many other input and guidance, Ocwen can better reach customers. We also, again, outreach are partnering with so the local councilman to provide a borrower outreach again, reach owners as possible to be able to provide.
Yeah, you guys have done a great job with that, and we've always appreciated the partnership across the board, and again, reaching out to various partners in various markets and learning more. It's been incredibly impactful, and it helps us to learn about your process to where we can prepare our homeowners better should they run into a situation. So thank you for that. Michael, I'm going to start this question with you. What do we need to know about Asian American homeownership? This is the theme of Asian Love. You tell us, based on what you have seen at TD, what do you feel this group really needs to know and understand about Asian American homeownership?
Well, again, it's based on data, right? So we do know that roughly 61% of the AAPI community are homeowners in the U.S. We also do know that amongst the different ethnic groups that are AAPI, there are diverse homeownership rates. And, according to the Urban Institute, where we're seeing lower homeownership rates are usually also associated with lower incomes. So that's very informative in terms of, because there's always this perception that AAPI community doesn't necessarily need CRE loans because they're very jumbo focused. And so you can have loan officers or hire loan officers that are focused on the low and moderate income community that might be AAPI that we're not generally focused on, because and jumbo, I think, is just a result of where majority of Asians live, right? Yeah. 31% live in California, 9% in New York. You couldn't ask for a higher cost market, so that's a function. But I think what you said earlier in terms of when you disaggregate data, there are opportunities for people who are not jumbo buyers. So that's very important. Absolutely. Thank you. Tamara, especially as a Korean American, what do we need to know about Asian American homeownership?
I think that, a lot of times American community, I think that in a lot of cases, people feel so I think it's important to breaking down and looking at the data at all different levels. Bucket. Sorry, thank you. I didn't realize I wasn't on. So that's what I would say is really taking a look at, breaking down the data and the fact that it is a bigger issue across the board.
I agree. I think the issue is really huge, and I think the breaking down is crucial to really getting an understanding. I think, quite frankly, this is maybe a controversial term, but I think it's been the laziness of America to not break down what is happening with, Asia is a huge continent, so to lump everyone together is just, it's a bit ridiculous. But neither here nor there, we're here now. Leda, tell us, what do we need to know about Asian American homeownership?
I think I'm just going to build on what my co-panels have said, 1 in 4 Asian American pays more than half of their income in housing costs. Yeah. So, and that's, if we compare it to white households who are about 16%, that means that they're severely cost burdened. And I think part of it is that they're in high cost markets. So when we're looking at unaffordable housing, we have to obviously look at supply and what can we do. So we've increased the LIHTC equity investment caps for multifamily rentals, and really been more aggressive on the enterprise housing goals. And just to really drive investment in the way in which we hope to see it. And FHFA last year held a listening session on ADUs, accessory dwelling units, to help try to ease some of the supply things. So looking for, we're learning about that and just trying to figure out what the best way to do that in a way that ensures sustainability.
Perfect.
I just want to touch on the ADUs, but not just ADUs, but the Asian AAPI community also relies on multi-generational living, and so that also increases the cost of housing for the AAPI community, and it's something that we have to understand. I think accessory dwelling units helps that if there's a secondary market for it, and encourage our partners here to that along.
Perfect. And another thing that comes up that's really important to the AAPI community is limited English proficiency. We're in an environment with which, and I have to say, what it seems to me, and I don't know the numbers, but it seems to me that Asian Americans tend to be more English proficient than other minority groups. But again, we don't want to lump communities together. And so the reality is that if you're coming into this country from a foreign environment, there's a good chance that you're not going to know English. And so not only are you ingratiating yourself with American culture, you're ingratiating yourself with American financial system and English as a new language. So from the lender servicer perspective, Michael and Tamara, what are you all doing to support our LEP clients?
From a servicer perspective, when homeowners call into PHH or Ocwen, we do have agents that speak different languages. Of course, we don't have ones that speak everything, but if that's needed, we do have the capability to partner with an outside organization that can provide translation services by appointment. The other thing that we also do is, because we are doing so much borrower outreach, is we try to partner with HUD-certified housing counseling agencies that have housing counselors that speak those languages, so that they, again, as we all should know, housing counselors act as great advocates for our homeowners, and so if they are there as their partner, and they're able to communicate to them in their native language, then that obviously makes the whole situation a lot easier. When calling into PHH, if a housing counselor, as long as the homeowner authorizes it, the housing counselor can also be on the call. So again, if there's some translation issues, that hopefully they can communicate that way.
I love that you're doing that, because one of the complaints we have heard is that a lot of servicers do not take accountability for the language access, and that's an incredibly important aspect. So it's really good to know that Ocwen PHH is doing that work to make sure that the borrower has the potential to receive the information in the language with which they need. So thank you. Michael.
So on the sales side, we have we have a third party that we would outsource for we call a language line for individuals who would need assistance due to LEP. On the servicing side, or just more generally within our organization, we're looking at the CFPB's guidance in terms of how you can implement strong policies that support LEP customers. And so we're in the process of doing that evaluation, because depending on the markets you're in, there might be a greater population of one race, ethnicity group than others, and you kind of have to prioritize that. So that's what the evaluation process we're going through. But we know that it's important for us as a financial institution inclusive in terms of not just on the front end where we provide the language line, but what we do on the back end as well.
Excellent, excellent. And Leda, from the perspective of the government, what is happening, what is FHFA doing to ensure that our limited English proficient home buyers, renters, and homeowners are taken care of?
To echo a lot of what's already been said, I urge people to work with housing counseling agencies, to take advantage of the Mortgage Translations website that really does provide all of those documents. And even during COVID, loss mitigation scripts provided in different languages, so people really understood what they were doing. This is a serious transaction. This is people's home. But I do want to mention that, we and other regulators have heard a hesitancy for certain lenders and servicers to implement language access plans due to the perception of legal risk. And I really want to underline the CFPB's message that financial institutions not violate ECOA or Reg B when they collect language preference. This information continues to receive the safe harbor from CFPB. In fact, there might be legal risks associated with not providing language access to the close relationship between LEP.
That's incredibly important, and it's something that we need to continue to call out, because we hear this on our side often, that a client is saying, well, my lender won't talk to me or my servicer won't talk to me. So calling that CFPB reg out is really important. Thank you, Leda. Okay, so Leda, I'm going to stick with you for our last question, and we've got about 2 minutes left, and then we're going to open it up for questions. But Leda, what is the one thing you wish everyone knew about housing?
When my friends are looking to buy a home, I always tell them, shop around. Demand that you get the best rate. Do not just negotiate. Do everything you need to do. This is a huge financial transaction for you and your family for a long time. So I think just fully understand everything and keep pushing as much as you can to get into the best rate. And not just rate, but product and terms.
Excellent. Thank you. Michael?
So for me, I think it's more about dispelling some of the myths, right? So most people think you need 20% down to get a mortgage. I would encourage individuals to get educated around the mortgage process, and that you need perfect credit, generally seen like 720 or above. There are programs that offer, credit at 620. And then, there are low down payment mortgages as well. So people should educate themselves about the mortgage buying process because that's important. And I think it's kind of a function of most lenders when you look at their websites and they give examples of a particular product. It's always based on 20% down, very good credit, and then you exclude yourself. You self-select out of the process automatically because you don't feel that that's me, right? So I do feel that, we as lenders should educate people more and point them to resources that could provide education around the home buying process.
Absolutely, and that's especially important, I think, when you're denied for your first loan, to have an understanding that this is not the end of the road, this is just a temporary blip in the home buying process. There's more that you can learn, so I'm
and even if you're denied it, lenders who are following the regulations on the ECOA and the Fair Credit Reporting Act to provide adverse action notices, use those notices to get a copy of your credit report. Know what's on your credit report. Know why you were declined if it was related to credit, so that if there's an error, you can really follow up and get that cleaned up. And it might be a function of you get that done in 30 or 45 days, and it changes everything. You can go back to the lender. So it's very important to use those tools.
Excellent. Thank you. And Tamara, we'll wrap it up with you. What do you think everybody needs to know about housing?
Yes. So from a servicer perspective, most of the people that are reaching out to us are not reaching out to us because they just want to have a conversation. They normally have a problem. And so the biggest thing for our people is to focus on communication. As a servicer, we are subject to the rules and regulations of our investors and regulators, and so we can only do so much, but we cannot provide assistance if we don't know what's going on. And so I think what happens in a lot of cases is people are struggling. They may call us once, let us know, but then they don't answer our call again, or they don't follow up with us. And if you don't keep that open lines of communication, then we can't provide assistance options, because we cannot do it, obviously, without your authorization. So communication is definitely key. And then also, again, just to go back to the housing counseling, I'm a big believer, and I know my company is a big believer in the benefits of housing counseling. So I would implore any homeowner who's struggling to meet with a housing counselor, because they're going to, again, be your advocate in helping you understand what all of the information that's out there, so that by the time you talk to PHH, you understand what it is that you're entitled to and what you should be asking for. And so an educated homeowner is going to be the best one out there, and hopefully get all of the assistance that they need.
And I love that. Thank you, guys. So we're going to open it up to questions. We've got a few minutes left. Faith?
Sorry, on the special purpose tax credit, that's really very fascinated about. It says it's been 40 years, and I think only TD is doing that, or very few. I mean, definitely less than 5, and I don't even know except for TD. So can you give a specific example on how that works, and hopefully lenders can do more and regulators can encourage more to do special purpose tax credit?
I think Leda touched on one of the things. I think when HUD came, that there was always this, it was always allowed under the Equal Credit Opportunity Act. There was always concern whether or not it was a violation of the Fair Housing Act. HUD recently came out and clarified that it is not a violation of the Fair Housing Act. That was probably a couple months ago. So that gives some legal relief, because most lenders are saying, while ECOA Reg B allows it, I'm not sure that I'm going to, go over the legal hurdle with the Fair Housing Act. So that's off the table. We started our program before then, and it's focused on, some lenders could design programs and say, I'm only going to lend to particular blacks or Hispanics. We focus our program on majority black or Hispanic neighborhoods. So individuals who are non-black could get it as well, but the likelihood that we will get more black or Hispanic borrowers are very high. And so our initial data that we've seen so far supports exactly what it is that we wanted to achieve. We also looked at our credit box and said, well, where are we willing to make some adjustments? We know that black and Hispanic borrowers are debt burdened in a lot of ways. When we look at denial reasons for blacks, it's generally debt-to-income ratio across the board. So we moved our debt-to-income ratio out to 50% for borrowers who have a credit score of 660, 45% if they're at 620, but at 50%. And then we looked at, multifamily dwellings in some of the markets that we're in are important first-time home buyer choices or homes to get in, because a rental unit can help pay for the mortgage itself. So we lowered our minimum down payment on our two-family to 5% at a 660 credit score. So we're making tweaks around the credit parameters, and that's why it's called the Special Purpose Credit Program, to say what special things are you willing to do to continue outreach and be more inclusive of communities that have been typically underserved or have been discriminated against. So those are some of the highlights, and the questions always come up as to, what did your risk folks feel about it? So we modeled everything, right? We said, what are our potential losses if we do this? So we get the risk folks satisfied, we get our legal folks satisfied, and we also engaged outside counsel, who are, legal law firm that is very good in this space and helps to advise lenders. There are other lenders who have programs. Some of them have it on the small business side. But, having outside counsel is also very important, because as you put together your case for a special purpose credit program, the hurdle is really not that high. I think the CFPB has actually given great latitude to lenders to say, you can use your own data to support why you need to do this program, or you can use publicly available data. I mean, for example, homeownership rate for black is at 44% versus 75% for whites. You can say data that shows they're more debt burdened than other folks. So there are different ways you can create the case for your program, but your outside counsel should help you develop that.
Yeah, that's incredibly important, because even last year, we, the Black Homeownership Collaborative was working on this, and special purpose was basically, lenders didn't want to do it.
They want to.
Because of, until the HUD regs came out, until the HUD clarification came out, and now they're still not pressing to do it, but there's a little bit more openness, and the one thing we kept hearing was, well, we could get sued, and all that, and it was just one compliance burden after the other. So you're totally right, Michael, and I'm so glad that you all are pioneering this effort, and I hope that more lenders will really pick up on that. Thank you.
You're welcome.
So I think it's great, you know, that you guys are doing what you're doing. However, affordable housing is becoming, you know, less and less, and not a reality. I've also read that corporations are buying houses, right, driving the market up for their own use, whether it's, you know, for rental for their employees or just a rental business. I think I think the government needs to take a look at that and put in place, you know, regulations to prevent big corporations from gathering up houses that, you know, that people can buy that may be affordable. But I think the key is, if home ownership is going to be a reality and growing, there's got to be more affordable housing for people. That's the bottom line.
I know that FHFA does not create housing, but can you respond to that on any level based on what you know the government is doing? This is going to have to be our last comment before we wrap at 10, but is there anything that you can share about what the government is doing of affordable housing?
You know, I 100% agree. The supply constraints rising home price market have made it incredibly difficult for new first-time homebuyers to enter. So, you know, we're both looking, we always look at the first-time home buyer population, how policies the enterprises are going to enact will impact them. Then looking at the ADU policy, those kinds of things. How do we do incrementally increase supply, increasing the equity investment for LIHTC to try to help increase affordable multifamily units. But, you know, this is something I heard impacts all communities, the Asian American community, we've heard it for the Latino community, those investors coming in and buying. So, but I just want to say that, you know, it's always complicated, right? We also see a lot of minority investors investing in low-income neighborhoods in their communities, and I do see that as a way to build wealth within the community. So, but the enterprises, both for their REO portfolio, have a first look program, which allows nonprofits and owner-occupants to have the first ability to buy a home that's in the REO portfolio before they allow investors to make an offer. So definitely encourage people to continue that, and also, you know, give us feedback if you think the program could be.
Thank you. Tamara, we're going to end with you.
And kind of to build off what Leda was just talking about on the First Look program, I mean, as a mortgage servicer, we're not obviously developing affordable housing, but we do participate in the First Look program. And then Ocwen/PHH, you know, we look for opportunities within our own REO portfolio that if there's something on our books that we're able to donate to an organization that can then turn around and make it affordable housing. So a good example is last year, we had a property in Kentucky that we ended up donating to a nonprofit, and they in turn were able to house a single mother and her children, low-income family, I think actually African-American in this particular case. But it was just one way that we could help in a manner that we normally wouldn't have much to do with as far as developing affordable housing.
Got it. Thank you, Tamara. We're going to wrap this. We want to just thank you guys so much for participating. Thank you, Tamara Gifford, Michael Innis-Thompson, and Leda Bloomfield. We're really grateful to have heard your perspective. I'm going to turn this back over to you, Faith.